Welcome aboard as we explore the unfolding crisis at Bank of America.
To get straight to the facts, tens of thousands of customers are reporting frighteningly zero balances in their accounts, while the bank asserts it's just a technical issue.
And it's worth noting that financial titans like Warren Buffett are suggesting there may be deeper issues at play.
These outages could signal larger financial instability within Bank of America, raising concerns about a possible bank run.
What exactly is causing this disruption, and how extensive is the impact?
Recent data reveals significant service interruptions nationwide, affecting major metropolitan areas such as San Francisco, New York, and Chicago.
Now, what about the implications for commercial real estate? Might this trigger a need for government intervention?
It's certainly a possibility. If public confidence continues to erode, we could be entering the early stages of a bank run, reminiscent of past financial crises.
To wrap this segment up, what are the essential takeaways for our viewers?
Transparency is crucial. Without trustworthy practices, we risk repeating the errors of the past.
But stay tuned. Up next, we're diving into the housing dynamics with rising concerns over California's exodus. Anchors aweigh. Let's set sail into our first summary, focusing on the alarming situation surrounding Bank of America.
Here's the scoop. Tens of thousands of customers are reporting zero balances in their accounts, while Bank of America claims it's merely a technical glitch.
Hold on tight. Major financial figures hint at something more ominous. So what's the crux of this issue? Why are so many accounts showing empty?
The thesis posits that these outages may signal more profound financial instability at Bank of America, which could potentially lead to a bank run.
Let's dissect the reasons behind this outage. How widespread is it?
Data shows significant disruptions that are being felt across the nation, impacting major cities like San Francisco, New York, and Chicago.
What about Warren Buffett's actions? What could his stock movements indicate?
His recent sell-off suggests a lack of confidence in Bank of America's stability, especially amidst these disturbances.
And we can't ignore the looming questions surrounding commercial real estate.
Indeed, the liabilities in this sector might outstrip its perceived value, indicating a precarious situation.
Could these pressures lead to government regulations?
Certainly, as public confidence wavers, regulators may feel compelled to intervene decisively.
What are the emerging risks we should be mindful of?
Continued declines in public confidence could usher in the beginning of a bank run, analogous to past financial meltdowns.
Are federal bailouts a possibility?
It's a distinct possibility. Another economic slip could trigger a swift response from authorities.
To sum it up, what are the key takeaways for our viewers?
Transparency is non-negotiable. We must avoid the pitfalls of past mistakes.
But hold on to your life jackets. Next up, we'll dive into the housing situation as Californians leave. Massive sell-offs underway.
Trust me, the insights from Gerli on Californians are leaving Florida are something you won't want to miss.
Anchors aweigh. Our next insightful summary explores the fascinating trend of Californians leaving Florida.
Here's the inside scoop. Gerli reports how homeowners from California are starting to sell properties purchased during the pandemic.
Interesting trends ahead. What implications does this have for the housing market? What's the main thesis here? Why are these homeowners now looking to exit Florida?
The core conclusion is that price surges and shifting inventory levels are directly linked to the influx and subsequent exodus of Californians.
Let's examine the crucial elements. First on our list, inventory trends.
Exactly. Data reveals a staggering inventory increase of 126% in various zip codes.
Now looking at home price fluctuations across states.
Home values are taking a hit. This trend appears to be spreading rapidly.
What about the investor market? There's considerable movement, isn't there?
Definitely. Approximately 24 million investor-owned homes exist, and many are liquidating their portfolios right now.
And let's touch on migration patterns.
The pandemic-related influx is waning. We're witnessing a boomerang effect as many Californians head back to their roots.
What does the future hold for real estate?
Looking forward, ongoing price declines are anticipated as new economic forces impact local markets.
As we gaze into the future, what are the key predictions?
Whalen predicts that price drops will persist, making it vital for buyers and sellers to grasp market dynamics.
And what about the effects on local economies?
Shifting housing markets might create economic strains, particularly where real estate plays a significant role in employment.
To conclude, what are the critical takeaways for our viewers?
Nick emphasizes that sellers must stay attuned to market changes to avoid overpricing their homes.
But hold on. Up next, we dive into insights from Stephan.
You won't want to miss his take on housing expectations. It's bound to spark discussions.
Anchors away as we delve into our next topic. Why is looking poor significant?
Let's dive right into it. Stephan discusses how many are faking wealth while drowning in debt.
What an eye-opener. What drives people to flaunt appearances of affluence? What's the essential message underlying Graham's perspectives?
The thesis promotes building genuine wealth over flashy projections. Authentic satisfaction leads to financial success.
Let's explore consumerism. What insights does Graham provide?
Excessive consumerism can ensnare individuals in debt cycles. Seeking validation through purchases often results in stress.
Now, what about the allure of luxury products?
Luxury items operate as status symbols, manipulating emotions to drive spending into unnecessary debt.
Let's discuss wise spending habits.
Graham recommends valuing experiences over items. Investing in enjoyable activities culminates in heightened fulfillment.
What are Graham's forecasts for spending behaviors?
He foresees a pivot towards valuing experiences over possessions, a trend impacting how financial services adapt.
What about heightened consumer awareness?
Graham predicts a rise in awareness about consumer habits, igniting interest in more sustainable spending trends.
So what are the central takeaways?
Graham emphasizes that genuine enjoyment from wealth springs from freedom and choices, not superficial flaunting.
And how do material possessions factor into happiness?
They should be secondary. Graham insists that happiness stems from appreciating options and experiences, allowing for deeper life fulfillment.
But hold on to your hats. Up next, we explore insights from McElroy on the hidden agenda behind Amazon's push to bring workers back.
You won't want to miss Ken's expert take on that.
Anchors away as we embark on an engaging discussion. Is Amazon spearheading a push back to the office for just productivity?
Let's get to the crux of the matter. Amazon, alongside other companies, is urging employees to return, with a staggering 79% of CEOs suggesting remote work will soon be a thing of the past.
That's an intriguing shift on the horizon. What are these corporations actually aiming to achieve? What's the pivotal thesis of this discourse? Why this rush for a return to the office?
The thesis reveals that companies are wrestling with productivity issues and maintaining their cultures amidst rising inflation.
What about workplace culture? Why is it so crucial?
Companies are worried about remote work eroding their culture. In-person interactions foster collaboration.
Let's examine the CEO's viewpoint on this.
CEOs fear accountability. If employees aren't present, their productivity is hard to gauge. Almost 79% believe remote roles could vanish in 3 years.
How does inflation factor into this return to the office narrative?
Inflation encourages companies to reassess employee structures as layoffs create a larger candidate pool.
What does the future hold for remote work?
Only a few roles may remain remote. The trend appears to be shifting toward in-office work, especially among larger firms.
Let's explore what the future predictions entail.
Market restructuring is inevitable as companies seek efficiency, emphasizing a return to an in-office workforce.
What role will AI play in transforming workplace dynamics?
Advancements in AI could lead to the elimination of some remote positions, prompting companies to reevaluate their staffing strategies.
To summarize, what's the bottom line here?
The conclusion suggests a pivot back to office work due to evolving corporate landscapes. Companies must balance culture, efficiency, and inflation.
What should employees take away from this?
Employees should adapt and prove their productivity. This is a crucial moment to reassess career moves and market fit.
But don't anchor just yet. Coming up next, we'll dive into insights from Jason Walter.
Trust me, you won't want to miss his take on the October 2024 California housing market update.
Anchors away on today's housing insights. What's unfolding in the California market?
It's another month, and Jason Walter is here to reveal the latest stats from August 2024.
From soaring prices to changing sales trends, these insights are not to be missed. So what's the overarching picture?
Jason notes that while prices are rising, inventory is climbing too, indicating a shift in market dynamics.
What's driving sales lately?
Sales saw a year-over-year increase of 2.8%, showcasing an uptick in buyer engagement.
Home prices are on the rise. What's fueling this?
Indeed, at just under $889,000, we're observing steady growth. However, areas like the Bay are beginning to show cooling signs.
And what about the overall inventory situation?
Inventory witnessed a staggering jump of 39%, presenting more options for buyers, but also risking market saturation.
Let's gaze into the crystal ball. What predictions does Jason have for September?
With an uptick in pending sales, we expect to see a rebound in closed sales. However, the ongoing supply-demand imbalance warrants attention.
What's the situation regarding regional markets?
Not all areas are faring the same. Some regions thrive while others lag, which underscores the importance of monitoring local nuances.
As we round off, what's the key takeaway from Jason's insights?
As the market balances, both buyers and sellers need to adapt to evolving trends.
Finally, how should buyers approach this?
With more inventory, buyers may have choices, but they should remain vigilant about market shifts.
If you're enjoying these insights, give us a thumbs up and hit that subscribe button.
Your subscription helps us keep delivering essential updates for smart real estate choices.
We've just unpacked a wealth of insights regarding Bank of America's current challenges.
Absolutely. Buffett's recent move signals a historic vibe, and experts like Gerli emphasize what those outages really mean for our banking trust.
And Stephan warns us, as withdrawals increase, a bank run could soon loom on the horizon.
Plus, don't forget the possible need for government intervention, as Ken McElroy pointed out, a vital point that echoes with Jason Walter's view on past financial crises.
These conversations show us how interconnected our financial landscape truly is.
Before you go, remember that staying informed can be your greatest asset during tumultuous times like these.
If you found this discussion valuable, make sure to like and subscribe. Your support helps keep the insights coming.
And don't miss out on our next videos. There's always more enlightening content waiting just around the corner.
Thanks for watching, and we can't wait to see you in the next analysis.